I believe you can see my screen right now. Right? Can you just confirm, please?
Yes.
Yeah, it's all good.
Absolutely.
Perfect. Okay. Shanti, are you here?
Yeah, man. Hey, guys.
Hello.
Shanti will let you in if you are getting disconnected or something like this. So please don't buzz me during the session because I won't be able to read your questions. I mean, in private, I won't be able to read the Discord. So if you're getting kicked out of the session or you just loses your internet connection or something like this, or your laptop battery dies, please just text Shanti and he will let you in. And same rules as usual. Same rules as usual, but I will tell it for the newcomers. If you have a question during the session, please don't interrupt me. Don't talk when I'm talking. Don't use your microphones. When I'm asking you a question, you can raise your hand. And if you raise your hand, I will ask you to answer the question. And anytime when you have a question, just raise your hand or write it down in the chat, and I will answer it as soon as I can. But when I'm talking, please don't interrupt me because, you know, it just gets me out of the flow and I lose the connection. And yeah, let's just start the breakdown. Oh, sorry, I just started recording.
This meeting is being recorded.
Is on. So welcome everyone once again. It's Marcel, and of course Shansi is here too. So welcome everyone. In this live webinar, I will create the breakdown of yesterday's trades. I took 3 trades yesterday, as you remember, and I will break it down in depth. And after that, I will just create a forecast. After that, actually, I will answer your questions. If you have any questions around the trades, after the question and answer, I will just simply create a forecast for the upcoming week on the 4 hour, 15 minute, 1 minute, 5 minute. And after the forecast, actually, we will have another question and answer. If you have any questions, we will create the markups in this video, in this live webinar. So just use the usual schedule, you know. Azam, why are you muted? You aren't muted. Okay. So starting it, guys, I will remove everything from the chart and start it with a clean perspective. Please, guys, everyone, mute yourselves. And only unmute yourself if I'm asking you to unmute yourself. Okay? Thank you, guys. Just simply removing everything and coming back to New York Open. And I will use the replay too because it's much easier. So switching to the 15-minute chart. I don't know, guys. I don't know if you guys remember what has happened yesterday. Hopefully you do. Hopefully you do remember because I broke down everything in the markups. So we will start on the 15-minute chart first, and I'll tell you what the plan was. Here comes the first question, and these sessions are pretty interactive, so you have to answer lots of questions because I will ask lots of questions. So first question. Do you remember what was the plan for yesterday? Do you remember for the 15-minute plan? What were we waiting for? If you can answer the question, please raise your hand and I will ask you. What was the plan for yesterday? Who raised their hand? Well,
as I remember, the plan was we are in 4-hour supply zone. We need to wait for 15-minute change of character, then 1 minute change of character on new 1 minute zone and take it short.
Exactly, that was the first plan. And there are always 2 plans or more plans. So what was the other sided plan? You can actually just draw on my screen. Draw on this region, what was the plan for yesterday?
The second plan was if we already flipped the zone, if I'm not wrong. I don't remember 100%. Yes, if we flip the zone.
Yeah, that was the 15-minute change of character. So that's the first plan. If price flips the zone, creates a 15-minute change of character here to the downside because this is the last recent 15-minute low point. If this breaks with body closure, we go short. What was the second? Kaizam, please answer. Kaizam,
Oh.
You raise your hand. Guys, what was the second plan for yesterday? Come on, be more interactive. Come on. Michael, please.
So if you say that if this 50-minute demand we're not gonna break or will be flipped, we're gonna see deeper mitigation of the like 50%.
Exactly. Thank you. So these were the two plans for yesterday. Okay, guys. So please be interactive. I will ask lots of questions. I'm asking lots of questions in this session. So please use your microphones when I'm asking. Be interactive and try to be here. Try to answer the questions because this is the easiest way to learn. If you're just sitting and watching and listening, that's not as effective if you are actually talking and trying to be interactive. So please. Okay, so the first plan for yesterday was if price flips this 50-minute demand zone, because this was the 50-minute demand zone, if price flips this zone, then we'll be able to take shorts based on the new supply zone that formed, and we'll be able to target this liquidity line down here. Second plan, if price creates a change of character here to the upside, with a simple change of character, because actually this was pro-trend trade, so this long lined up with the pro-trend trade. So if price creates a change of character, we'll be able to take longs to a deeper region of this 4-hour demand zone. So these were the plans for yesterday. And as you can see, here was a range too. Here was the range high, here was the range low. So the range low had to be swept sooner or later. So both of the plans were actually effective. Both of the plans were good to go. And both of the plans could play out. So let me just switch to the 1-minute chart. And before I switch to the 1-minute chart, as you remember, we had to wait for a 50-minute break of this zone. Not just a 50-minute wick, but a 50-minute body break of this zone, because there was liquidity below this zone, right? So here was clear double bottom, first bottom, second bottom. If these bottoms are getting swept with a wick and price reverses to the upside, then more likely price will continue the way up to mitigate the 50%. So this was the first plan. But if price closes below this zone, then that will be the break of this zone and we'll be able to take shorts. So first of all, switching to the 1-minute chart. Here was this 15-minute zone, liquidity below it. The liquidity has been set, right? So here was the liquidity. This liquidity has been swept with this movement. Then after this movement, price reversed immediately to the upside with strong movements, as you can see. So strong reversal has happened here. Let me just play price forward a bit. So strong reversal has happened after a liquidity sweep. All we had to do in this region, when, of course, in lifetime, all we had to do is to check the 15-minute chart, because it has been written down in the markups. It has been written down in the markups and the updates too, that if a 15-minute candle closes below this zone, then it will be a break. If it doesn't close below, it just simply wicks this zone, then it will be a sweep, and we'll be able to look for longs. These were written down in yesterday's markups. Okay, so checking the 15-minute chart, you can clearly see that this was just a wick below this zone, and after a wick below a liquidity sweep, price reversed to the upside immediately. So the 15-minute zone did hold. All of the liquidity has been swept from below this zone, and this caused confusion around you that price created more liquidity and swept more liquidity. No, this movement right here swept all of the liquidity from below this zone. So swept even the lowest point of the liquidity. So this was a liquidity here. I mean, this was a liquidity line, this was a liquidity line, this was a liquidity line, and this is the lowest point of the liquidity. And this movement, as you can see, swept all of the liquidity. Swept all of the liquidity and reversed to the upside. So there can be more liquidity sweep if price wants to get wicks below this zone. So price swept the liquidity, all of the liquidity with this movement and reversed to the upside. There can be happening more liquidity sweeps rather than this sweep because it swept all of the liquidity. Okay. So after the sweeping movement, price reversed to the upside immediately and printed a strong change of character. And of course, printed a flip zone too. Here comes the next question. First question, can you just mark please the flip zone? Kaizen, please mark the flip zone. Exactly, thank you. Here was the flip zone. And the reason that this was a flip zone, and this counted as the first change of character, and technically not this down here, is that this was liquidity for this supply zone. So if these stops are getting swept, this will be just a liquidity sweep, and price has a chance to react on this supply, because this is how structure works: coming down, creating liquidity, sweeping the liquidity, reacting on supply zone, coming down, creating liquidity, sweeping liquidity, coming down. So this can be counted as a change of character here to the upside. This is a character changing movement if this breaks, because this is just liquidity for the supply zone. Okay, so the supply zone has been flipped from this candle, and the first flip and change of character has happened. Question: am I speaking too fast? Yes, no.
No.
Okay, so I won't slow down. So the first change of character and flip has happened at this region. So this was the first change of character. Perfect. Then price strongly changed character here to the upside. This was the second strong change of character. So price technically strongly changed character in a pro trend, meaning I will be looking for long opportunities. The flip zone has been formed here. About the flip zone, what can we see? We can identify a liquidity line. Here was clear double bottoms. I will identify this as double bottoms because technically between this low point and between this low point, not many candles have passed by. So I will count this as the first bottom and this as the second bottom. And this won't be triple bottoms for me. This is just second bottoms. I mean, two bottoms, two separate bottoms. But it's still liquidity. Of course, it's still liquidity. So price printed liquidity for this zone. Perfect. It just literally played out. It just literally played out perfectly. Let me just play price forward. I did set a limit order on the 50% of this candle. So I had a limit order here on the 50%. And I even sent you this trade. Why did I send you this trade? Because let's just count the criterias. The criterias were pretty good. Actually, this trade had 10 criterias. So first criteria, let's just count the criterias. First, second, third, fourth. These are the base criterias. What was the first criteria? This is the question. What was it? You can use the chat now. You can use the chat now. What was the first criteria? Pro trend. Okay. Let me just switch this to brush. So pro trend is the first criteria. What was the second criteria? Higher time frame mitigation. Exactly. Higher time frame zone mitigation happened. Even it just literally wigged the whole zone. So the whole zone mitigation happened. Third criteria. No Kaizen, that's not the base criteria. We are just counting the base criteria. These are the base criteria currently. Liquidation, exactly, flipping markets, liquidation. Liquidation, perfect liquidation has happened. Because price swept all of this fucking liquidity from below this zone, so liquidation and strong reversal has happened. Fourth base criteria, what is the fourth base criteria? Inefficiency, exactly, inefficiency. Okay, let's just count the variable criteria. 5th, 6th, 7th, 8th, 9th, and I will draw the 10th here. So what was the 5th, 6th, 7th, 8th, 9th, and 10th variable criteria? Exactly. The first variable criteria will always be the entry type. And it was a change of character in this case, right? And a flip too. So technically it was a flip entry and the strong character changing entry too. So I will just simply mark it as a flip because that was the first one. What was the 6th? What was the 6th? V-ship. Exactly. Thank you. V-ship was the 6th because price swept the liquidity and immediately V-ship reacted. So swept the liquidity here with this wick technically and this wick technically, and huge inefficient movement started to the upside with strong movement, right? So it was a V-shaped reaction to. Okay, what's the 7th criteria? 50% mitigation, and actually more than a 50%. So whole zone mitigated. So that counts as a 50% mitigation. 8th criteria. What is the 8th criteria? Yeah, corrective pullbacks and pro strong movements. Exactly. I will just simply write as strong pro movements. So strong pro movements. Long movements were much stronger than the short movements. I will zoom out when I delete these criteria. But long movements were much stronger than the short movements. What was the 9th criteria? Thank you, Borislav. Liquidation combine. Let me just remove it from here because it's just messy. Combine liquidation was the 9th criteria. Oh my God, I can't write. Liquidation combine. No, liquidation combine. So combine liquidation was the 9th criteria because here was liquidity swept. This is the first liquidation. Here was liquidity for the entry zone, so combine liquidation happened. 10th criteria, not coming from an opposite sided zone. And I would like to talk about this topic because not coming from an opposite sided zone. I would like to talk about the 10th criteria because if we don't count this as a criteria, let me just explain why. Then it was a 9 criteria trade. If we count this as a criteria, then it was a 10 criteria trade, which I will take any fucking time in a pro trend. I will take this 10 criteria trade any time in my life. Actually, if it pops up on my screen, I will take it no matter what. So that's why I took this trade, and that's why I actually not signaled it for you, but sent you the trade idea. Because it was a pretty fucking good and high criteria and strong trade, which has a like 60 or 70% win rate. these type of criteria have 60 or 70% win rate. So it actually, you can book more wins than losses from this entry type. So it was a really, really good trade. It just swept us out. But let me just talk about the 10 criteria, which was the price is not coming from the unmitigated zone. So I just did count this as price broke above this zone. Broke above this zone. And actually, it wasn't coming from this zone because it broke above this simple strong zone, which had liquidity below it technically. And also, it was a 5-minute zone too. And price broke above this zone once again here. So as you can see, price just simply broke above this zone. And it just created so many change of characters below this one. It just simply changed the character here on this 5-minute zone too. But here's a mistake that I made. Actually, I didn't count this not criteria, but zone right here. Here was a 5-minute zone. And this 5-minute zone has been mitigated. A really, really, really small fucking percentage of this zone has been mitigated. So as you can see, it was just literally the 1% of this zone that has been mitigated right here, of this extreme 5-minute zone, but it has been mitigated. A really, really, really small percentage has been mitigated. So I didn't count it as an opposite sign zone mitigation. That's why I counted it as a 10th criteria. And that's why it was a criteria for me that price isn't coming from opposite side zone. Because if you just simply think about sell traps, technically this could be a sell trap because price will sleep the fuck out this zone right here because, you know, deeper region of the zone has to be mitigated. And this actually lined up with the plan where price will mitigate the deeper region of this zone. So that's why I counted as this as a criteria. But yeah, technically there was that zone mitigation, which I actually couldn't see in yesterday's session. I couldn't see this line. I was so focused on the 10 criteria, I was so focused on this trade that I couldn't see this small fucking mitigation right here, which trapped me actually. But although, if I would have recognized this, if I would have recognized this, that there was a mitigation of this zone, I still would have entered here. I still wouldn't care. Because, you know, 9 criteria, 9 extremely strong criteria, with combined liquidation, with fucking all the good criteria, I would have entered here without hesitating, even if I would have sold this. So yeah, it doesn't make any difference for me. This trade would have been a go for me if I would have seen this mitigation here. So what has happened after this? Price swept us out. I don't know if you guys entered first. Okay, first, it didn't hit my stop loss. It didn't hit my stop loss here at this region. Actually, I used a 3 pip stop loss on this trade. Yeah, I had 3 pip stop loss. It just felt much safer for me because, you know, 2 pip couldn't even cover the whole zone barely. So I just used 3 pip stop loss. So first, this movement right here didn't take me out. It didn't hit my stop loss. Literally in IC markets, it just kept me in. And price was just sitting exactly at the stop loss point and it didn't sweep me out. That's why I fucking love IC markets. So yeah, after I saw this and after I saw the break of this high point, I wasn't sure about this trade anymore because price was just literally hesitating inside of this zone and couldn't give any high impact reaction. It just literally hesitated, created a small range. So after I saw the break of this high point right here, I just did set my stop loss to break even. I just immediately did set my stop loss to break even because I just wanted to be break even instead of a loss because this trade looked like more than a loss, more than a win. I mean, it looked like a loss more than a win. And yeah, I just did set my stop loss to break even and it has been hit right here. So it was a break even trade. And after it just simply would have swept me out from the trade. So first trade, break even. This was the first trade with 10 criteria or 9 criteria. You decide which one would you use this, which one would you use for this trade. I just used 10 criteria. Okay, after this, let's just play price forward. What happened after this? A break happened. A break of the zone with body closure has happened. On the 5-minute chart first. So here was the 5-minute break of structure to the downside. So price broke structure here to the downside with body closure. And if I switch to the 15-minute chart, there was even a 15-minute body closure break of the 15-minute demand zone. So technically, it wasn't a simple sweep anymore. It was a break of the zone. So what was the plan after the break of the zone? What was the plan after the zone has been broken here? Asking a question. If you raise your hand, you can answer. What was the plan after the break of the zone? Let me just see. Who was it? While
we need to define the flip zone, which caused the flip of the demand zone supply. Then we can enter after the confirmation entry or risk entry directly on 1 minute.
Exactly. Thank you for your answer. Exactly. That was the plan, right? So the second part of the plan played out because of course, the first plan has played out too, where price swapped the liquidity and changed character to the upside. That played out, and we actually hopped on that trigger. It played out, and we hopped on that trigger, and actually, it didn't it didn't give us profit. So that's it. The first plan played out. And after the first plan, the second plan played out. So after the flip of this zone, we can look for shorts. We can simply look for shorts, and I just went to the 5-minute chart and found some zones. Found this first supply zone here, which could have been the sell trap of this higher supply region. And of course, here was the extreme, which was actually a sell trap zone, which actually caused the first movement that has mitigated the deeper region of this demand zone. And there was liquidity below this zone here. So we could actually expect the mitigation of this zone too, because there was liquidity below it, and this zone could be part of the liquidity and the sell trap. But if price can come from this zone, even with liquidity, even with a confirmation entry, then we can play this zone. But if this zone can be confirmed with a liquidity or a confirmation entry, then this zone will be tapped. So that was the plan right here. That was the plan right here. And as you can see, sorry, this zone is just too huge. As you can see, price created this huge inefficient movement to the downside and broke this structural low point. So here was a break of structure. Okay. Here was the supply zone that initiated the break of structure to the downside. Can you just simply tell me that why wasn't it about this zone? Why couldn't we trade on this zone? This is a question again. Why couldn't we trade on this zone? Kaizen?
Because it's part of the liquidity.
Exactly. This was part of the liquidity. This was a simple sell trap zone. Here was a liquidity line, as you can see. And this zone will be swept. I mean, this zone had a huge chance to be swept. So I just simply skipped the trade on this zone. I was just waiting for a further confirmation, either on this zone or either on this zone. This was my plan at this session. So I believe price reacted on this zone. Yeah, it reacted on this zone and printed another sell trap. And printed, of course, it became more liquidity. Here was more liquidity. So I saw that lots of you guys actually jammed on this trade and did set a limit order on this trade. I wasn't setting a limit order on this trade because it was heavily part of the liquidity. It was really just liquidity. Price just simply collected more sell orders, more sell orders, more sell orders, more sell orders for the later sweep. So all of these sell orders can be swept and the variable supply zone can be tapped. So all of these sell orders can be swept and the variable supply zone above can be tapped. Either of this one or either of this one. So these zones were just sell traps. These zones were just collecting sell orders to sweep them out. So after this, price reversed to the upside. Okay, just a bit faster. Reverse to the upside and swept the zone out. Swept the zone out and swept all of the liquidity out, as you can see. So the liquidity has been swept out. Okay, at this point, I did set a limit order on this zone. I had a limit order on this zone because there was so many liquidity below this zone. There was literally so much liquidity sitting below this zone. I used the 3-pip stop loss once again here. So there was so much liquidity here. And this was a really strong origin zone that has caused this whole order flow to the downside, had liquidity below it. Even this one was a liquidity trend line right here. All of this liquidity has been swept. And the zone tap has not happened at this region. Zone tap has not happened, but price reversed to the downside. Okay. I still kept my order here. Because, of course, first I deleted it. First, when price couldn't reach this zone, I just deleted this order because I needed liquidity creation. And price created liquidity. Price created liquidity here. So liquidity creation has happened here, as you can see. Perfect liquidity creation, even this one, even this one. Here was liquidity for this zone. So there was a chance that price will mitigate this zone and reverse on this zone. So once again, I did set my limit order here. And yeah, what happened? Price swept me out. This was a straight stop loss trade. This went to my stop loss trade without hesitating. So far, I took a break even and I took a loss. Okay, but the second plan has played out. Where price, if this zone can be confirmed, then more likely this will be part of the liquidity too. And here's the thing which I couldn't recognize in this session too. Here's the thing which actually I couldn't recognize. That price just created perfect liquidity for this zone. Here was this extreme zone, and literally this tap and this pullback right here became the liquidity for this zone, became the sell trap for this zone actually. And yeah, small percentage of the zone has been mitigated, so we can expect on a deeper mitigation. Price printed liquidity, so more likely if this zone won't hold because there's liquidity. So that was actually a stupid mistake to set a limit order there, but I just realized what was my mistake. I was just so focused on this plan that I couldn't recognize that this became a sell trap, and I became part of the sell trap, and I've been trapped. I've been sell trapped. That's it. It actually, it isn't a mistake. It's not a mistake, because you have to try. You have to keep giving your shots. If there's your edge, you have to keep repeatedly giving your shots. There will be times when you will be swept out. There will be times when you hit break even, and there will be times when you will win, when you will actually, your plan will work out. And yeah, I just ignored the fact that price created liquidity for this higher supply region. I actually couldn't recognize this liquidity, took a loss on this one. Okay, my fault, my mistake. I took that loss. It's my capital. I didn't care about it because, you know, I was looking for the next opportunity. Here came the next opportunity. Price perfectly liquidated this liquidity into the supply zone. So you remember this was the higher time frame liquidity line. Price perfectly liquidated this liquidity into this valuable supply zone right here, which was the extreme of this whole movement. And after this liquidation into this zone, price mitigated more than the 50% of this zone. As you can see, more than the 50% mitigation has happened clearly. And after the 50% mitigation, price reversed strongly. Here was a strong reversal to the downside. But here's the thing that I'd like to talk about. Why did I count this as a change of character right here? Why was it a change of character? Let me just show you. So as you remember, sorry, not on the 1 minute chart. As you remember, this was still a valuable supply zone. So this was still a valuable supply zone that I did set a limit order on. And my limit my limit has been triggered here. I have a limit here, and my limit has been triggered there. So price printed actually, here's the footprint of price that limits have been triggered here. You can literally see that sellers entered the market here because here became a pullback in the market. This zone could give a pullback to the market, which wasn't strong enough to break structural change character to the downside, but it gave the pullback. And from this pullback, price flipped this zone. So price was coming up, reacting on this zone, coming down, flipping this zone. So this was the demand zone, which has flipped the zone. So this was the last recent 1 minute demand zone, which has initiated the flip of this zone. And after this, after price flipped this zone and mitigated the 50% of the valuable zone and swept the liquidity into it, it just created a V-shaped recovery coming up and strongly coming down, and actually created a change of character right here. It was a character changing movement because this was a demand zone that has flipped the supply zone. It actually takes some time to recognize these zones. It takes some time, but it's all about muscle memory. By time you will be able to recognize these zones, you will be able to see these zones, and you will be able to understand footprint. I'm just creating these recaps. I'm just creating these case studies, etc., to help you guys, to help you to train your muscle memory. But actually, in the future, I will give you more homeworks. There will be homeworks in this community, more and better homeworks than there used to be. And these homeworks will be able to actually help you to train your muscle memory. So, okay. So price react on this zone. Flip the zone, flip the zone, and then the change of character happened to the downside. Okay, sorry. Let me just remove these. And also on my, let me just play price forward. So on Oanda, I'm using Oanda, there was a small change of character on the extreme too. So this was the extreme point, and price actually barely but changed the character here too. So it was technically a strong change of character, but I didn't really count this as a change of character movement. I just counted this as a liquidity to take. So this was liquidity, liquidity to target. This was liquidity to target for the shorts. Okay. So second thing, you had a question about why did I choose this zone? Why did I choose this zone as an entry point and not this zone above this zone? So, okay, here's the zone that you were asking about. I didn't choose the extreme one right here. I did not choose this zone. I did choose the smaller one right here. And okay, I have a question. I have a question about this. Why did I choose this zone? Actually, I want you to answer this question. Why did I choose this zone instead of this upper area? I want you to answer this question. It's actually a pretty simple question, pretty simple answer, which you can see I'm using lots of times. You can literally recognize this pattern in almost every single recap video. Because of the big inefficiency. Inefficiency starts from there. That's when the money came in. Exactly. No, actually, markets, I didn't split the risk with this time. I did not use the risk split entry, but that would have been a good solution. That would have been a good solution to actually use a risk split entry here on the 50% and here on this zone. That would have been a really, really good solution. But actually, the money and the impulse movement and the real inefficiency came into the market from this candle. Just compare this candle. Wiki shitty candle, which has caused this small candle. There's no real inefficiency. Maybe 1 pip inefficiency can be found here. Shitty candle, literally. This candle, look at this chat. This is a chat candle. This chat candle literally caused this huge inefficiency, and this candle did put the money into the market. So the money flowed into the market from this candle. You can see literally the footprint of the money. A huge inefficient candle like this means there's money. A small inefficiency means there's less money. There's still money, but there's less money. And actually, the break of this demand has happened from this supply also. And the simple reason that I used this candle as the entry point, because money came into the market here. If money came into the market here, then more likely more money will be came into the market on the order block that has caused this money flow. So yeah, that's why I did set a limit order on this zone and not on this wiki shitty candle that has caused small inefficiency. This is a chat candle. This is a real chat candle which actually did put money into the market and broke below this demand zone with a movement, with a huge inefficient movement. Okay, so here was my limit order. Let me just check the stop loss I used. Yeah, I actually used 2.5 pip or 3 pip. Let me just check. I believe it was 2.5 pip. Yeah, it was 2.5 pip stop loss. And even though if price would have swept me out from this trade, I mean, not swept me out, sorry, but went up to mitigate this inefficiency right here, the stop loss covered the inefficiency. So if price went up to this inefficiency to fill up this small inefficiency right here, then my stop loss covered that inefficiency. So if price came up here at this point, this was the first and last point of the inefficiency, my stop loss perfectly covered that zone. As you can see, it perfectly covered the inefficiency. So if it had a feeling to fill up this inefficiency, then actually my stop loss covered that zone, that inefficiency, that gap. And yeah, I used the 2.5 pip stop loss for this reason, because the 2 pip couldn't cover that inefficiency very much. That's why I used the 2.5 pip. And yeah, technically, that's it. That's it. The rest is history. I was targeting the same zone that I told you in the markups, because I told you if price flips this zone, then we'll be able to target this zone right here, this 15-minute zone, or even the 50% of this zone. I just simply targeted the full zone right here. And let me just play price forward. Actually, on the 5-minute chart, it will be easier. TP hit. That's it. So that was the trade. I mean, not just a trade. These were the trades, 3 trades. Any questions, guys, about these trades? Any of the 3 trades I took today? I mean, yesterday, sorry. What have we learned? Always have a higher time frame outlook during the session. Yeah, exactly, chilling markets. You know, guys, I'm always saying that always, I mean, don't leave on the 1-minute chart. Always take a look at the higher time frame perspective. Always take a look at the higher time frame perspective, because higher time frame will always be stronger than the lower time frame. And at this region, I took the second trade right here. I was lost in the noise. It's not actually, I can admit that I was lost in the noise. Not actually lost, but I was actually focusing on the 1-minute chart instead of the higher time frame perspective. I couldn't recognize the liquidity here. I couldn't recognize that price will sweep the fuck out of this liquidity and mitigate the higher time frame zone, because there's liquidity, because this is how the market works. So I was just simply focusing on the 1-minute chart and focusing on this 1-minute liquidity when there was higher time frame liquidity above, which I couldn't recognize. I admitted it. I made a mistake, of course, because just because I'm teaching you, just because I'm creating this membership, that doesn't mean that I won't make mistakes. Of course, I will make mistakes. I will make lots of fucking mistakes, because I'm a human. I'm just sitting in front of my monitor, my brain gets tired, and I'm a fucking human too who can make mistakes. Of course, but the difference between me and, for example, some not profitable traders is that I backtest my mistakes. And I'm backtesting my mistakes with you guys. And I show you my mistakes. I show you what was my mistake. And we are learning from these mistakes. Just because you're making a mistake, just because you're making a loss, doesn't mean that you're a bad trader. Doesn't mean that you can be successful in this market. That will make you a bad trader and a bad person if you doesn't backtest your mistake, if you can't find your mistake. But if you're backtesting and finding your mistake that you were made, you're going to be a good trader. You're going to be profitable by time. So yeah, of course I'm making mistakes too. Of course I'm jumping on sell traps like this. Of course I will jump on sell traps like this in the future once again. I don't know how many times in the future, but I will jump on these sell traps. But it doesn't make me a bad trader. If I wouldn't have backtested this mistake, and I wouldn't have recognized this mistake, and I wouldn't have looked for the actual mistake in this trade and just search for the cause of this sweep, etc., etc., then I will be a bad trader. But I did find the mistake. I did backtest, and I will become more and more by these backtestings, by these mistakes, because these are refining my plan. These are giving me more insight of the chart, of the price action, of my own plan, of my own personality, of my own emotions, and these will make me a better trader. Making mistakes technically will make you a better trader if you backtest those mistakes. So yeah, let me just read the questions. Okay. Why they use that change of character? I just literally explained it. Are you a Chad? Yes, I'm a Chad. How much percentage you personally risk on each of these trades? I always use 1%, but if I split my risk, I'm using 1.5. I mean 0.5, 0.5. I mean half percentage. Sorry. So yeah. You don't consider supply chains as possible entries as they create liquidity at this. You don't consider supply chains as possible entries as they create liquidity at this state. Yeah. If for example a supply chain creates liquidity, a clean liquidity, then I would consider it as entering. But if it's heavily part of the liquidity right here, so this is heavily part of the liquidity, 3 10-9 touches, then more likely this will be swept, and this small percentage, I mean this small amount of liquidity won't be able to reverse price to the downside because this is part of the trap. Yeah, I did get the third one. I took all of these trades yesterday. I opened this one, I opened this one. Where is it? This one and this one too. I just posted the metaphor picture too. So yeah, that's it, guys. We have to move on, but was it all understandable? Actually, it was a really insightful session for me too, because I've learned so much from this session. I've learned so much from this session, and this is how it should be. This is how it should be. After trading a session, you should be backtesting your own trades. You should be backtesting your mistakes. You should be backtesting even your wins too, because there could be mistakes in the wins too. So this is how it should be every single day, in and out, because we can learn from these. How many criteria were the third one? Oh, okay, sorry, I just didn't count it. Actually, it was first criteria, higher time frame tap, right? So here was the higher time frame mitigation. Let me just count. Higher time frame mitigation, liquidation into a higher time frame zone, pro trend technical because 50-minute change character, and this was okay. Sorry, I forgot to mention that this was a refinement of the 50-minute zone. So as you can see, this is the refinement of the 50-minute zone too. And yeah, it was a pro trend trade because 50-minute just changed character and 50-minute trend changed to bearish. So technically bearish was the pro trend trade. Fourth criteria, inefficiency. There was huge inefficiency, as you can see, caused from this candle. And of course, from the higher time frame zone, there was inefficiency too. For it was a change of character entry. So it was the fifth criteria. There was a huge V-shape reaction. Sixth criteria, there was liquidity to take right here. And I mean, smaller time frame liquidity to take right here. Not to take, but to target. So here was a liquidity to target and higher time frame liquidity to target here. So it was the seventh criteria. Other criteria, strong pro movements, because actually shorts became stronger than long. So as you can see, here was the weakness of the long movements. Price couldn't create break of structure to the upside. These long movements became weaker and weaker and weaker, and short just replaced the strong pro movements, and short movements became the strong pro movements actually. So it was the eighth criteria. Where was I? there was a combined liquidation, and price was coming from an unmitigated zone actually from this one. What other criteria did it have? Let me just check. Let me just check. What did I leave out? Guys, what did I leave out? Okay, can higher time frame zone, liquidation. What was this? Oh, 50% mitigation, left out the 50% mitigation, of course. And yeah, that's it, 9 criteria trades. Third trade, can you please address to the 1 point before your trade? It reacted strongly on a 5-minute zone. Didn't it answer? Well, you know, it didn't react aggressively actually on a 5-minute zone. No, technically, because that zone was only just liquidity sweeping zone. So this zone caused this candle to the upside, which reacted on the supply zone. And more likely, the supply zones, 15-minute supply zone, 5-minute supply zone will be stronger, much stronger than that random 5-minute demand zone. So yeah, it actually didn't answer only because the only purpose of this candle right here was to speed the liquidity, speed this liquidity and mitigate the zone. The purpose of this zone, the actual job of this zone was to break below the demand zone and change the character and build liquidity. So this zone will be much stronger than this random 5-minute zone, and the only purpose of this zone is to sweep liquidity and reverse price to the downside. So yeah, it couldn't even break the structure to the upside. It couldn't even break this structural high point with body closure. So it didn't even create a break of structure here. So as you can see, it just wigged above that structural high point, meaning this is just a liquidity sweeping demand zone. Okay, so we have to move on. We have to move on and create the perspective for today. So yeah, it was easier for me to create this recap video in this session because actually I've been breaking down these 3 trades for 45 minutes straight. So yeah, it's easier to break down in this session. Now, okay, switching to the 4-hour chart and quitting from the replay mode. Breaking down the higher time frame, 15-minute, 5-minute, 1 minute, and creating a perspective for this session quickly in 15 minutes. Okay. So what has happened? Technically on the 4-hour chart, nothing much has happened. 4-hour is the same. Just look at these 4-hour candles, shitty candles, right? The movement has happened here. The liquidity sweeping movement has happened here that we were expecting yesterday. The liquidity has been swept into the 15-minute zone, but this can be seen on the 4-hour chart. So we have to switch to the 15-minute because technically on the 4-hour, nothing has changed since yesterday. Price is literally in the same exact movement, and just yesterday's plan has just worked out. How much risk reward did you make on the trade? Yeah, 21. It was a 21 risk reward ratio trade, and it has been posted to the Discord group too. So okay, let me just find it because some of you guys didn't believe that I actually took the trade. Just a minute, please. Fuck. Here it is. Yeah. Nice Photoshop. Yeah, actually. Fake. Yeah, I was faking. It's a Photoshop. Don't care. Won't care. Don't care. Okay, so moving to the 15-minute breakdown. What happened on the 15-minute chart? The exact same movement that we were expecting yesterday, right? So price just created more liquidity with this movement. And actually, I did TP out right here. I've even posted a picture about the TP out. I've even posted about the exact entry point. So don't care, won't care. I TP'd out here, and price just created more liquidity right here. 4 equal bottoms, right? 4 equal bottoms above the 50% of this structure breaking demand zone. And the structure breaking demand zone has been mitigated. So yesterday's plan will be continued. Actually, there's nothing more to say about this because we just created the perspective for this session yesterday. And liquidity has been swept. Liquidity has been swept into this zone. And as I said yesterday, if this zone is being tapped and price can create a change of character here, then the trend will be continued to the upside. And technically, that's it. That's it. Liquidity has been swept into this 15-minute zone. I don't know if you remember for the perspective. Please just check yesterday's markups. Yeah, we can actually target the 50% of this 4-hour zone. That will be the plan for today. Really fucking simple plan. Liquidity has been swept into this structure breaking 15-minute demand zone. After this, it presented a huge reaction to the upside. Actually, here you can see a huge reaction to the upside, which wasn't a 15-minute change of character, but more likely it was a 5-minute change of character and a 1-minute strong change of character. And there's huge fucking liquidity target on the upside too, as you can see here, below the 50% line. So this is a huge liquidity target below the 50% line right here. This will be our target point. So if price not changes character, it has already changed character. So not if, it already changed character, we'll be able to take good criteria trades right here based on this 50-minute zone, targeting this 4-hour 50% right here with this liquidity target. But I will switch down to the lower time frame. Michael, what's your question?
Yeah, so I just wanted to notice this 50-minute supply that could be a decisional one, as this was mitigated a flip zone.
Yeah, of course, this is a supply zone, but more likely this supply zone will be broken. More likely it will be broken because price heavily reacted on this demand zone and technically swept lots of liquidity. And I believe this will be broken, but there's a chance that this supply zone will give us a reaction and actually create a change of character to the downside. But I don't see any relation for this. I believe this zone will be broken, but all we have to do is adapt. So switching to the 5-minute chart. So here was the reaction. Here was the mitigation. And okay, let me just zoom in. Here's the first decisional demand zone. And here's the second decisional demand zone. Okay. Actually, there was a character changing movement here to the upside, then it changed back the character here to the downside and broke the structural low point. So this can be counted as a change of character, and this can be counted as a strong change of character. Why? Because price is coming down, coming up, coming down, change the character to the upside. Here it was a buy trap actually. Here was a character changing movement to the upside. Then actually price changed back the character here. Here was a character change back to the downside. Here was a pullback. Here was a break of this low point with body closure. And right now price change character here on the 5-minute chart. And strongly change character here on the 5-minute chart again. And left behind two valuable demand zones. More likely, this zone won't be able to hold price because this is part of the lunchtime area. More likely, this zone will be able to hold price, and this will become part of liquidity. So I'm expecting this kind of a movement. Price will mitigate this zone, create a small pullback, speed the liquidity because there will be liquidity, mitigation of this deeper area, 1-minute change of character, entry, bam. This is what I'm expecting now. This is what could happen in this session. So technically, my plan in this session is to wait for the mitigation of this zone. Of course, if this zone can print a good confirmation with good fucking criteria, then we'll be able to take it. But if price can't create a good confirmation on this zone will be tapped. 1-minute change of character will happen here, and that's it. After a sweep of 3 bottoms, it wasn't able to give V-shaped recovery. It shows as weakness of bulls. I don't believe that it shows the weakness of bulls, but we will see. We will see. Actually, I really believe that this liquidity will be swept and this 50% will be tapped, and I'm still on the bull side. But we don't have to predict this. We don't have to predict. If this zone won't be able to hold price, if this deeper area won't be able to hold price, and price just simply flips this zone, what can we do? We will be able to take a short based on this new zone that has flipped this 15-minute demand zone and 5-minute demand zone too. So we don't have to predict shit. All we have to do is react on these zones. I'm just showing you the possibilities. So yeah. Yeah, it just created more liquidity here and swept the liquidity and reversed the upside. I believe this zone, this deeper area will be able to hold price, but we don't have to believe shit. If this won't be able to hold price, then this will be flipped and we'll be able to go short. If this will be able to hold price, then we'll be able to go long. That's it technically. This is a really simple plan for today, but let's just see another and less perspective. Marking out this 15-minute supply zone here that has caused less recent breakout structure and demand tap at this region. If this supply will be tapped, so if this 15-minute supply will be tapped, because price won't be able to mitigate this zone or this zone. So if it goes up to this zone without a mitigation of these zones, then it will be able to give us a reaction, more likely coming back down to these zones. So if this supply is being tapped first, if this 50-minute supply is being tapped first, and if it gives us a confirmation, then we'll be able to take shorts down to this region or this region. After this, we'll be able to wait for the same confirmation here on this zone. But more likely, if this supply gives us a reaction, then these zones will be weak and these will be broken. So if price reaches the supply without mitigating these demand zones and it prints a reaction, prints a confirmation entry here, then more likely these zones will be broken because this will be counted as weak. Okay, this is the first plan. Second plan, if price reaches this zone or this zone and prints a confirmation for us, we'll be able to take longs up to this supply. So this will be the first target point right here. So this is the second plan. Price reaches this zone, creates a confirmation entry, we'll be able to take longs. Third plan, if price simply can't even reverse on these zones, but flips these zones and flips this overall demand too, we'll be able to take shorts. This is the plan for today. Three simple plans that we could follow. And technically, that's it. That's it. Any questions around this, guys? Yes or no? I mean, the question is,